Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Monday, February 14th, the Valentine's Day edition of the nightly video. So happy Valentine's Day to anybody and everybody that is listening. About 10 minutes after market close here in Jacksonville, 4:10 p.m. to be exact. And we're going to get right into it. And it was quite a doozy of a day in the markets, very volatile, very choppy, and very headline driven. We had some headlines come out regarding Russia and Ukraine that kind of made the market spike up and down, just making it a very dangerous, fast moving place today. So a lot of quick moves up and down in the market today in stocks and the indices. And we're going to look at all of that once we get into the charts. But first, let's talk about what just happened. Like I said, volatile action continues driven by headlines. So we had an announcement come out this morning regarding the U.S. and an embassy and destroying documents. That made the market move. We had some comments from the Ukrainian president come out that made the market move. So it's really been a pretty interesting last couple of days. We saw fear spike last week. At the end of last week, some of these headlines start to impact the market a little more. So like I said, we're going to get into that right here in just a moment as we get into the charts. But first, let's talk about performance. G6 down about 2/3% today. S&P down about 1/3%, 0.39 to be exact. Qs eke out a green close, although it was not by much, up 0.12%. Dow down 0.5%. Mid caps down 0.4. Russell 2000 down about the same. So really not a great day, even though you see the Qs green. A lot of stuff that was weak. We did see some pockets of strength, but a lot of the areas and stocks that were really strong to the end of last week absolutely got crushed today. So we're going to look at that too, because it's a pretty interesting dynamic. And by that, I mean that chemical agriculture group, the fertilizers, oils, and even defense stocks today taking a hit. So we're going to get into that in just a moment, like I said. But first, let's run through this. Market state has not changed from Friday, still in consolidation, not changed from Don's video on Friday. Consolidation 131 follow through day failed. And then we've got the trend gauge, does not have any major changes, but a very small change. Move this smaller red arrow here a little farther to the left as we're continuing to live below the 200-day on the indices. Market leaders remains the same. We did see some leaders start to crack, give way, undercut some moving averages today, but a decent bit of some of the leaders still trying to hang in there. But as you can see, this is also pointing bearish on the small red arrow. So no significant changes to the trend gauge, just a small move of this arrow over a little bit more, leaning more towards bearish on the long-term side of things there. So quickly, let me highlight Revere before I go into the videos, as I always do, or into the charts, excuse me. This is me here in the middle. This is my email, hunter@revereasset.com. If you have any questions, please feel free to send me an email. I will happily respond and answer any questions or direct you to whoever you need to talk to. Or you can email anybody here, Dan, Tim, Merrill, Alex, or Don at revereasset.com as well. If you're interested in our strategy, if you just want to talk to somebody, they're always available. So let's get right into the charts and let's look at the S&P first. So as we can see here on Friday, we undercut the 200. We don't get back above it today. But I want to show you a 5-minute chart of SPY here so you can see what I mean by some of these intraday volatile moves. So right around here would be around lunchtime when we started to get some of those headlines coming, okay? So this is a 5-minute chart. This area right here is today's action on SPY. So you get a headline move down here. The S&P goes from basically being about flat-ish to being down about 1% very quickly, as you can see, in a matter of about 20 minutes. Then we also get some more news right around here that caused the markets to spike up and move a little higher. So you get a sharp move down and then a sharp move back up in a very short period of time, and all of the indices kind of experienced some of that today. But I just wanted to show you on a shorter intraday chart what that looks like. But nonetheless, we are still below the 200 here on the S&P. We have not gotten back above that, and you're seeing this 8-day and this 21-day roll over and look like they're going to make a beeline for the 200 themselves. That's the pink line, and that's the green line, as you can see, angling in that direction. QQQ, and I'm going to move pretty quickly through the indices here because I do have a good bit of stocks I want to talk about. You can see here that volume number is not correct, so please disregard that. I don't think that that's right. But similar candle, very similar on all the indices, really. to what you saw with the S&P. So we had a big day down Friday, kind of hanging in there, closing in the middle of the range today. Still not what you want to see. See this 350 area? I know we talked about it. I've talked about it a lot in the videos. That was kind of resistance today, and that's not a great sign. We want to see that potentially flip back to support if you get back above it, but not being able to get above it and getting pushed down off of it. To me, that signals that maybe this 350 is flipping to resistance here on QQQ. But once again, very similar action to what we've seen on the indices here. Just brutal 2 days here on Thursday and then Friday, and subsequently those moving averages are continuing to follow them downwards. IWM, which hung in there pretty well to end the week last week because of the strength in oil. However, today oil was not the friend of the small caps, but IWM is trying its best to cling to this 200 level. It seems like it's likely it's going to go lower just based on the market backdrop and the action, but it's trying to hold this level. I would watch the lows from the last couple of days here, basically right around 199. If those get taken out convincingly, you could be in for some nasty action there. But it's trying its best to stay here above this 200 level on IWM. MDY, very similar candle to what we saw with the S&P, with the Qs. Undercut Friday's lows by a little bit, closed roughly in the middle-ish of the range. But see, similar to what we saw with the Qs and that 350 area potentially turning into resistance, here it appears that mid-caps are seeing the 21 EMA potentially turn into resistance. And then lastly, as far as the indices go, let's look at the Dow, down 0.5% today. Really one of the weakest looking candles today of the indices as far as where it went and how much it recovered. So the Dow not really immune to the weakness, as you can see, a very similar pattern to all the other indices, and rejected at these moving averages, just like all the other indices were, particularly similar to the S&P and the Qs. So DIA, S&P, all have a very similar look today and the last couple of days. Now that's normal, but what we're looking for here on the Dow as well as these other indices, as far as a bull case goes, very simple. We want to see a reclaim of the 8, reclaim of the 21. We want to see these stop going down. Until these stop going down, the 21 and the 8, that short-term trend is never going to be your friend. So for the time being, indices not looking spectacular. And I will go over some of our trades here in just a moment as well. So let's quickly look at the 10-year yield. And I only want to bring this to your attention because it is right here at 2%. And that's what this 20 level means, as you can see there. So we got the 10-year yield making a big move from all the way back here in December, where we were, call it 1.3, 1.4, all the way up to 2% here in a very short period of time. And I think we've obviously seen that reflected in stocks. But the reason I wanted to show you this is because this has continued higher and is consolidating nicely, even though it's up here at these lofty levels. So TNX continues to move higher right there at that 2% area. Now let's get into some stocks. And first, we're going to look at the stocks that actually showed some relative strength today. So that doesn't mean these are good looking charts, doesn't mean these are strong stocks necessarily, but we want to show you what was actually showing some RS today. So Tesla up about 2% versus the market being down. By no means is this a constructive chart or necessarily constructive action, but we did see some of those big tech names kind of lifting the indices while there was a lot of weakness elsewhere under the hood. So Tesla being one of those names. Another one of those names that faded as the day went on is NVIDIA, and just semiconductors in general. I apologize if I can get NVIDIA to work in the, there we go. So kind of a similar chart or pattern here to Tesla, just in the sense that it's below the major moving averages here, except for the 200, and really not doing much of anything, up about 1.5%, finished in the middle of the range. One of those big techs that showed what we would call RS, relative strength today, being up 1.5% versus the S&P being down, but not really anything actionable, super constructive going on here. Amazon, another name that showed some relative strength today, up about 1.5% as well, getting back above the 21 and the 8. But like I said, we saw some of these big tech mega cap names hanging in there, showing some strength, while we saw other areas not doing well. So there's 3 of those big tech names that were doing well. Here's a sector that continues to act well and shows really nice follow through today. GLD, that would be gold, as you can see, making a strong move today as well as on Friday. Like I said, a big move up to the upside for gold on Friday and follow through confirmation on that today. So GLD, SLV as well showing some strength today, and the miners showing strength too. So GDX, this is the miners ETF. Additionally, nice follow through. And then NEM is the name that we own in the gold space. Pretty similar action, nice follow through today. So gold, silver, that continues to act well. And we know that that typically has done well when there's an increase in fear. Obviously, international tensions, fear about war will spark that. So, and that reminds me quickly, and let me scan to this just since we're on gold. I showed that big spike up in gold. Look at the volume here on TLT as well on this big up day, and 1.5% is a pretty decent day for TLT. But this also, to me, indicates there was certainly some big time fear going on Friday, as we saw TLT up 1.5% on big time volume. TLT typically, traditionally viewed as kind of a safe haven along with gold, those completely the risk off type of investments. Some more names that were strong today. Apps up about 7%, trying to show a change in character after the EPS here, but still not a great looking chart. Got the moving averages all, not necessarily in the right order, the 200 sloping down overhead. So I'd still be cautious with this one for sure, but certainly some strength today, up 7% versus the market being down. PanW, another one that's not necessarily your normal setup, or excuse me, the strength that we would look for. This is kind of a mess, for lack of a better term, as of recent. Maybe it just needs a new base, but nonetheless up 2% today, and has continued to hang in there better than majority of all other cyber security stocks. So PanW, a cybersecurity leader, as you can see by the RS rating here, showing some strength today. A few more here. Expedia up about 3% today. The travel booking sector or area has been very strong, particularly Expedia and Booking. Those two names have been very strong. Excuse me. Alcoa, aluminum, the aluminum king, as you might say, continuing their strength as well. Just a very vertical move the last week and a half or two from AA, after showing nice relative strength ahead of that, and then continuing that move higher, as we can see. And a few more here. XME, one of the strongest sectors of the day, very similar over the last week and a half to what you see there with Alcoa. And then lastly here, BITO, Bitcoin, although I see it has pulled back a little bit. I think actual Bitcoin ran up to about 45K, is now pulled back to around 42, 43. But the reason I bring this up is Bitcoin has actually held up pretty well, particularly compared to the market over the last couple of days, 3-4 days. So Bitcoin trying to show some relative strength. You can see the relative strength line getting vertical there, but Bitcoin hanging in there pretty good, especially compared to growth stocks or just stocks in general over the last week or so. Now let's go to some of the things that we sold today. So we exited Apple today on its inability really to get back above the moving averages. Had a nasty close on Friday, obviously. So closed out the rest of Apple, not able to really mount a real attempt at running at these all-time highs, making a run at this 180 area. Tried really hard at this 175 level, but ultimately rejected. So stopped out of Apple today, below the 21, below the 50, below the 8. We also sold CF Industries today. It was down about 9% at the lows, 8 or 9%. They report earnings today after hours, I believe, or tomorrow in the pre-market. But nonetheless, we sold this because we did not have a cushion going into earnings. And we also don't like for stocks to just be down 8 or 9% like we saw this one down today. So stopped out of CF. We also sold the remainder of our SSO position and closed out our short position and locked in those profits as well. So Grotection currently majority cash, about 92% cash. Only holdings in Grotection at this moment are Nucor, NEM, which I already showed, and then NRGU, which is a leverage product on the oil and gas space. The best thing I can show you as the derivative here is XLE. It's a lot of the Chevrons, the Exxons, those types of names. So that is what we're left with, is basically oil exposure, steel via Nucor, and then Newmont. So that's just to give you guys an update on the trades that were placed today and where we're at with Grow. Let's quickly cover some of the worst looking names today. ZIM down to a little over 2% today, but maybe presenting an opportunity coming back to the 21 here. This has certainly been one of the leading stocks in the market, but big down day on Friday to be expected, wide range there, like most other things, and then further downside today. But a leading stock approaching the 21, I wanted to bring that to you guys and show it to you. A couple of more here. Facebook, nobody wants this stock still. Relative weakness today, down about 1% versus the S&P down about 0.5%. So Facebook continues to be weak. Really didn't even make an attempt to run at this 8 EMA, as you can see there. So Facebook continues to be a dog. And like I mentioned, some of those areas that were showing big time relative strength last week, towards the end of last week, really hit hard today. And chemical agriculture is a good space to look at for that in particular. MOS down 5% today. NTR also down about 4% today. So both of these taking a big hit after showing some really significant relative strength last week. And then also, as I mentioned, the oil's having a tough go of it today. XLE down 2.5%, and XOP, I think, down about the same, roughly around 2.5%. So a lot of these oil names today pulling back, showing relative weakness versus the market. However, they've been very, very strong over the last couple of months. So last thing here, because this goes in the same boat, the defense stocks saw really nice relative strength last week and to end the week, as you can see here with NOC. But today, down about 2%. LMT was another name, same kind of story, big volume, big move in price on Friday. And today we saw some weakness in those names. You can see LMT down 2.5%. RTX, Raytheon Technologies, another name in this space, also down about 2% today. So some of these areas that seemed like the strongest and best areas over the weekend end up being the weakest areas this Monday. And some of the areas that people weren't anticipating to do well ended up doing well today. But that's the market for you. So I think I've covered a lot as far as what was working or what was strong today, what was weak, what we did in Grotection, as well as interest rates, news headlines, and everything else. So that is going to wrap up the video for this Monday, everybody. I hope you enjoyed it. Have a great Valentine's Day, and I will see you guys on Thursday's video and the podcast. Thanks, everyone.